Methods of accounting in Singapore. November 5, 2024. Accounting in general means process to record, analyze, and present all the transactions of the business with help of different accounting standards and principles. It forms an integral component of the country's financial sector. It gives transparency to accounting data and which are capable of to adhere of international standards. Accounting offers a strong regulatory framework, making an attractive hub for businesses and MNCs. Based on the accurate accounting and proper financial stakeholders, investors, and any other person interested in the business can take informed decisions. It requires several functions in general such as bookkeeping, financial reporting, accounts auditing, tax accounting, etc. ACRA Accounting and Corporate Regulatory Authority, which was formed as statutory board on April 1, 2004 with the mergers of Public Accountants Board, PAB, and Registry of Companies and Businesses, RCB. ACRA is the regulator of business registration, financial reporting, corporate service providers, etc. They are responsible for developing the accounting sector and setting up the accounting standards for companies, cooperatives, trusts, in Singapore. What is bookkeeping? What are its requirements? Bookkeeping in general is to record all the transactions which occurred in the ordinary course of business. Day-to-day transactions is recorded in the books, which forms the integral part of accounting. To follow proper accounting methods and procedure, the basic need is to build the blocks for reliable bookkeeping records. Such record is made from different documents such as invoices, purchase order, bank statements, business expense, payroll records, and other relevant documents if needed. Bookkeeping gives the comprehensive ledgers which show whether there are receivables, payables, reconciliation of cash generated. Ultimately, the result is P&L, balance sheet and cash flow statement, which can be monthly, quarterly, half-yearly, and yearly. What are the methods of accounting? 1. Singapore Financial Reporting Standards. 2. Singapore Financial Reporting Standards for Small Entities. 3. Cash Basis Accounting. 4. Accrual Basis Accounting. 5. Tax Accounting. Singapore Financial Reporting Standards. Generally, companies and MNCs follow SFRS to prepare its financial statements, which are in alignment with International Financial Reporting Standards, IFRS. SFRS has been recognized as the official accounting standards of Singapore. It allows greater flexibility that helps the Singapore's unique ecosystem. SFRS are accounting principles and guidelines which gives transparency, accuracy and consistency to the accounting records of the companies. It covers the various aspects like recognition, measurement, presentation and disclosure of financial information. Singapore Financial Reporting Standards for Small Entities. Not to give more burden and compliance issue, Accounting and Regulatory Authority, ACRA, made available the small entities to follow SFRS for SE, small entities, which is nothing but the simplest version of the SFRS. This standard reduces the complexity for accounting and preparing its financials. Also, disclosure requirements are also reduced comparatively to SFRS. This standard ensures that the financial statements and records of the entity are accurate and reliable. This standard is available only if the specific criteria has been fulfilled. Eligibility criteria include 1. Total annual revenue of not more than 10 million Singapore dollars. 2. Total gross assets of not more than 10 million Singapore dollars. 3. Total number of employees of not more than 50. Cash basis accounting. Cash basis accounting means where transactions are booked only and only when it is incurred. This type of accounting is generally adopted by the smaller business or proprietorship. Under this type of accounting, transactions are recorded only at the time of exchange, which can give the proper cash balances at the end of the day. This method of accounting may not reflect the actual financial position of the entity and is considered less favorable as payable and receivable are not taken into consideration under this method. Let's take a scenario. A consulting firm in Singapore provides services to a client in December 2023 of SGD $5,000, but the same firm receives payment of SGD $5,000 the given services in the month of Jan 2024. As the firm has opted the cash basis of accounting, then in this case the firm will pass the entry of service given in the month of January 2024. No entry will be passed in the month of December, the month in which service was provided. This will result in underreporting of the expenses which belongs to the year 2023, thereby resulting into inflated profits and higher tax payments. Accrual basis of accounting. Accrual basis of accounting means all the transactions are booked once they occurred. It does not matter whether the cash has been paid or received. This type of accounting is mandatory to all large companies, and which is the integral part or component of the SFRS. Under the accrual basis, transactions are recorded once they occurred, which provides the better financial position of the company. This accounting allows people like stakeholder, investors, banks to see the effects of revenue with correspondence expenses of the companies. Let's take a scenario. A consulting firm in Singapore provides services to a client in December 2023 of SGD $5,000, but the same firm receives payment of SGD $5,000 the given services in the month of Jan 2024. As the firm has opted for the accrual basis of accounting, then in this case there will be two separate entries in the books of accounts. In December month, the entry would be debit, accounts receivable, SGD 5,000. Credit, sales/income account, SGD 5,000. In January month, the entry would be debit, cash/bank, SGD 5,000. Credit, accounts receivable, SGD 5,000. To take informed decisions, the type of accounting method opted by the companies should be appropriate, as this accounting method will be converted into the annual financial statements, which should be accurate and transparent. Thus, accrual basis of accounting is most appropriate and worldwide accepted. Tax accounting. Income tax rules and Companies Act rule are contrasting with each other, so it is impossible to comply with both the acts and rules made therein. So certain business follows tax accounting so that it becomes easy to calculate the total income in the year of assessment. This accounting is differing from the normal accounting. It only focuses on the tax-related transactions. Expense or income may be treated differently only for the purpose of tax. This accounting enables to determine the total income and calculate the tax liability and determine the deadlines for paying the tax. Accurate accounting will avoid any penalties or interest on the tax amounts. Let's take a scenario. A consulting firm in Singapore provides services to a client in December 2023 of SGD $5,000, but the same firm receives payment of SGD $5,000 the given services in the month of Jan 2024. Additionally, the firm has incurred office expenses of worth SGD $2,500 in December 2023 but paid in January 2024. Under tax basis of accounting, treatment given to sales is similar to accrual basis of accounting. However, treatment given to expenses incurred is slightly different. The firm can claim expense only if it is paid unless it meets the specific criteria to claim the expense earlier. Treatment of expenses. In the month of December. Debit. Office expense, SGD $2,500. Credit. Accounts payable, SGD $2,500. In the month of January. Debit. Accounts payable, SGD $2,500. Credit. Cash/bank, SGD $2,500. In this scenario, for the purpose of claiming expense, the firm will be able to claim in the year of 2024 instead of 2023 as the expenses was paid in the month of January 2024. Financial year end in Singapore. A standard financial year end for companies in the Singapore is December 31st. But it is open to selecting its own financial year. This is the period where all the companies, small enterprises, proprietors to account all their expenses, incomes, any assets purchased, or liability raised. At the end of the financial, a comprehensive record can be found in the books of account. Assessment year is the calendar year for the companies. A company's income of the previous year is chargeable to tax in the year of assessment. Let's say companies follow the financial year from January 1st, 2023 to December 31st, 2023. The year of assessment will be 2024. Annual financial statement. Every company, enterprise, proprietor needs to prepare their annual financial statements based on their books of accounts. Annual financial statements need to be prepared as per SFRS or SFRS of SE. Annual financial statements include statement of profit and loss account, balance sheet, cash flow statement and changes in equity. Consolidated financial statements need to be filed if the company is a parent company or the company is a part of a group of companies. Only preparation of annual financial statements doesn't fulfill the requirement. All the necessary supporting documents need to attach with the annual financial statement. This annual financial statements needs to be filed within 30 days of holding the annual general meeting. This is mandatory to follow by all the Singapore companies. If not followed, then late fees or any penalties need to be paid with ACRA. Audit requirements. Companies Act has laid down certain criteria for audit application to the companies in Singapore. Exempt private companies are not eligible to do audit. But all public and non-exempt private companies need to audit their financial statements. Companies who have shareholders less than 20 in their cap table are considered as exempt private companies. Also, this company need to fulfill the criteria of not having total employee more than 50, revenue more than 10 million, expenses more than 10 million. The audited financial statements need to be filed their statements with ACRA in the XBRL format, extensible business reporting language. Conclusion. In a nutshell, it is important to choose appropriate method of accounting for the purpose of accurate financial reporting. Irrespective of the size of operations, understanding the correct method of accounting best suitable for your business is essential and can make significant impact on your business's transparency and growth. At Waterandshark, we specialize in guiding businesses through the complexities of financial reporting, compliance with Singapore financial reporting standards, and tax accounting solutions as per the needs of the business. Our team of experts can help you build a robust financial foundation, offering expert insights to simplify your accounting processes and ensure your business is well prepared to thrive in Singapore's dynamic economic environment. Connect with us today to learn how we can support your accounting needs and drive your business forward with precision and compliance.